Borrowers looking to refinance their existing housing or investment loans now have more flexibility. The Monetary Authority of Singapore announced it's fine-tuning its refinancing rules under the Total Debt Servicing Ratio or TDSR framework. Now, this came in response to feedback from some borrowers who can't refinance their existing property loans due to the current TDSR threshold. Introduced back in 2013, TDSR is a framework meant to ensure people borrow and banks lend in a sustainable manner. Patrick John Lim with this report.
Investors could soon get some leeway when looking to refinance their property loans. In its latest adjustment to the TDSR framework, the Monetary Authority of Singapore will now allow borrowers to refinance above the TDSR threshold of 60% if the following two conditions are met. If the borrower commits to a debt reduction plan to repay at least 3% of the outstanding balance over a period of not more than 3 years and fulfills the financial institution's credit assessment. Meanwhile, for owner-occupied properties, borrowers looking to refinance their housing loans will now be exempt from the TDSR framework, even if their properties were bought after TDSR was introduced. This is the second time the central bank has made adjustments to its TDSR rules, the first being in 2014. Currently, about 2.5% of new home loans are above the TDSR threshold. In a statement, MAS says this move does not amount to an easing of cooling measures. One analyst says the fine-tuning of TDSR rules is likely a targeted approach to help those on the fringe who are facing difficulties in refinancing.
Today's adjustment of the policy to fine-tune it is probably to assist the stretch buyers or the people whose income and financing have been adjusted to ease off this group of investors' worries. I do not think that this would have any impact in terms of cooling down the property market. The government would likely still want the property prices to trend down a little bit more before they would adjust the cooling measures.
In a note, DBS says this fine-tuning move would give those who already have a mortgage peace of mind in managing their loan repayment, while also making it more efficient for banks to process refinancing for existing borrowers.